Welcome to the deep dive. We've got a stack of sources you sent over, really digging into the markets for Tuesday, July 29th, 2025.
Yeah, a lot going on.
Absolutely. Our mission today, unpack these key forces. We've got this big trade deal, tons of earnings, and of course the Fed meeting.
It's definitely a busy landscape, and the market's tone, well, it's cautiously optimistic, Coming off that record high Monday,
Right.
pre-markets showing small gains, S&P and Dow futures maybe up 0.1%, NASDAQ 100 a bit better, like 0.25%.
Okay, modest.
Modest, yeah. But don't let that fool you. There are really three big things pulling the strings today.
Okay, so let's start with the first one you flagged, this new US-EU trade agreement.
Yeah.
On the surface, avoiding more tariffs sounds great, right? A clear win.
It certainly feels like a relief, yeah. Avoided that feared escalation. But the core of the deal, it's interesting. There's a new baseline tariff, 15% on most EU goods like cars.
15%. Wow, that's much higher than before.
Exactly. It was around 4.8% on average, so it's historically high, even though it avoids, a worse scenario. And the market reaction in equities, kind of muted, actually. European stocks even faded their early gains.
Oh, so not the big equity pop you might expect, but you mentioned the dollar, the DXY index surged near 98.4.
That's the key reaction, yeah. A multi-week high.
Why the strong dollar if the trade war risk is lower? Seems counterintuitive.
It does, but think about that 15% tariff. It's inherently inflationary, makes imported goods more expensive. And that complicates things for the Fed, right? Makes them potentially less likely to cut rates soon. Supports that higher for longer idea for interest rates.
Got it. Inflationary pressure, Fed hold a stronger dollar.
Precisely. So trade tension relief, yes, but maybe a tougher path for monetary policy.
And what did the EU commit to specifically? Where's the impact for U.S. companies?
Some big numbers. $750 billion in U.S. energy, LNG, oil, nuclear over 3 years.
Wow.
Plus $600 billion in new U.S. investments by 2028 and buying more U.S. military gear.
So clear beneficiaries there.
Yeah.
Energy names like Cheniere, Exxon.
Definitely. Locks in demand. And defense contractors, Lockheed Martin, Kratos. Industrials, too, like Boeing, Deere, should benefit from investment flows.
Okay, let's pivot to the Fed meeting then. Today and tomorrow.
Yeah.
No actual rate change expected, is that right? Target still 4.25% to 4.50%.
Correct. No move anticipated. All eyes and ears are on Chairman Powell's commentary later.
What are people listening for?
Clues on future cuts, mostly. And crucially, how this new tariff, this inflationary impulse factors into their thinking. Does it make them more hesitant to ease policy?
Right. How does this new inflation wrinkle fit their narrative?
Okay.
And force number 3, earnings season is really hitting its stride.
Oh, yeah. Floodgates are open.
Anything really jumping out from the report so far?
Well, United Health, UNH, that was kind of a warning shot for the whole sector, I'd say.
What happened there?
They reported $4.08 in EPS. Consensus was way higher at $4.84, and they just slashed their full-year guidance, cut it to $16 from like $26.50.
$16.
Right.
That's a massive cut. Why?
They cited an unprecedented medical cost trend environment. Shares were down over 3% pre-market. Big concern for the whole insurance space.
Oof. Okay. Anything positive?
Spotify, actually, FBOT looks strong. Their focus on profitability seems to be working. Good user growth, MAUs up 11%, premium subs up 12%, and solid profit numbers, better margins.
Okay. Bit of a mixed bag then. And we've also got bellwethers like Boeing and P&G reporting, right? What's the focus there?
Yeah, for Boeing, it's always about the 737 MX production, deliveries, any updates there. For P&G, analysts are watching organic sales, pricing power.
So bring it all together. How do these big forces, trade, Fed, earnings, translate into specific stocks to watch? Any opportunities or risks?
Sure. On the bullish side, JP Morgan just gave Nike a big upgrade, calling it a multi-year recovery play. So NKE is interesting. And Tesla, TSLA, could get a tailwind from a big new chip deal with Samsung, $16.5 billion. Plus, that EU trade stability might help their German operations indirectly.
Makes sense. And on the other side, besides the UNH worry?
Well, UNH itself could be a contrarian idea. Maybe it's a kitchen sink quarter getting all the bad news out. But you have to watch if other insurers report similar cost issues. That's the risk.
Right. Is it company-specific or sector-wide?
Exactly. And internationally, seeing some specific sell calls flagged on certain Indian stocks like Tata Technologies and NCC Ltd based on technical breakdowns.
So the bottom line here seems to be this really intricate dance between trade policy, the inflation it creates, and how the Fed reacts.
That's the core tension, absolutely. That new tariff structure is inflationary, and it could really put the Fed in a tough spot.
How so?
They might feel forced to stay restrictive, keep rates higher for longer than people expect right now, and that could put a lid on how high stock markets can go, even though we avoided the worst-case trade war. It's subtle, but potentially quite powerful.
A fascinating dynamic to watch unfold. So what stands out most to you in today's intelligence? Thanks for joining us for this deep dive.